VGLA is Vanguard's New World ETF, and it just launched a couple of weeks ago. It costs 0.07% a year. Super cheap. It's half the price of VWCE, and it holds about 10,000 different companies instead of VWCE's 3,700. So if you own VWCE, that looks like the obvious upgrade. Here is what it actually costs you to make that upgrade, since selling VWCE and buying VGLA actually triggers the Belgian transaction tax twice, and that's 1.32% each way. So I'm Thomas, I co-founded a fintech. I also wrote a book on ETF investing in Belgium. This video is about the Vanguard FTSE Global All Cap, what it is, whether it beats VWCE, whether it beats some of the alternatives like IMIE, and what I would actually do with it. The short answer is that it's a genuine great ETF, and almost not many people should actually switch to it because of the higher TOB rate. So let's get into what VGLA actually is. So it is the Vanguard FTSE Global All Cap UCITS ETF. It's accumulating. It is based in Ireland. Its its assumption was only this month on the 18th of August. It's got a physical replication, and the provider is obviously Vanguard. The total expense ratio, so that's the fee that you pay every year to buy it or to have the ETF, is 0.07, which is extremely cheap. It's domiciled in Ireland, which is perfect for tax reasons, and the TOB unfortunately is 1.32% because it's registered as a compartment in Belgium. And so essentially, it's an extremely solid ETF because it has so many different companies. What's inside a FTSE kind of all-cap index is that it's around 10,126 companies, which is crazy. And so you're really super diversified into stocks. You get roughly 6,000 smaller companies, not just massive ones. These are called small caps. So it's companies like a regional engineering firm or mid-sized kind of software business. Those are super interesting to have. In terms of the historical performance, just because it's come out, the backtest data is not going to be super interesting. However, you can see that the data on something like the IMI is super interesting, where you can see that essentially it's returned very nicely over the last 20 or so years, so you can use backtest and run it yourself. But the big kind of selling point is really the fee. So 0.07% is really cheap on a 50,000 euro portfolio. We're only talking about a 35 euro a year fee, which is crazy. And so when you compare it to the popular VWCE, that charges 0.14 and IMIE charges 0.17. So over decades, those gaps actually compound, so it's actually not a bad option if you're looking for low-cost, all-world kind of ETF. But let's get into the TOB catch. So every time that you buy or sell an ETF in Belgium, you have to pay a transaction tax, as known as the TOB, the Beurs tax or the taxe boursière. There are 3 different rates, so it's 0.12%, 0.35, and 1.32. VGLA, unfortunately, is in the top bracket, so it's 1.32% transaction tax. And so this is because the TOB rate depends on whether the fund is registered in Belgium and whether it pays out dividends. Once one compartment of a fund is registered in Belgium, the tax authorities treat them all as registered. So VGLA is actually a sub-fund of Vanguard Funds PLC, which has compartments registered in Belgium. VGLA reinvests its dividends rather than paying them out. Registered plus accumulating, that puts you at 1.32% per transaction. So that's every time you buy or you sell. And so as you can see, we have a screenshot from the FSMA, which is the Belgian regulators list. And there you can see that the Vanguard FTSE Global All Cap is there on the spreadsheet. So that means it's 1.32. It's a lot more than the 0.12 TOB ETF rates that we see for other popular ETFs. It is small and annual, but it still makes a big difference because you're spending a lot more on just one ETF purchase, sale as well. So you're probably wondering what's the difference between VGLA and VWCE. So against VWCE, it's not even close, and it's not really complicated. Both are Vanguard, which is a great fund provider. Both are Irish, both are accumulating, and both basically under the same umbrella. So they carry the identical 1.32% TOB rate. So there's no Belgian tax argument for one over the other. What really differs is that VGLA charges half the fee, even though VWCE recently reduced it, and it owns nearly 3 times as many companies. So if you're starting today and VWCE was kind of your original plan, VGLA is kind of a simpler, better version of a similar idea in ETF. The VWCE keeps one advantage though. It's been trading since 2019. It holds tens of billions, and so its spreads are very tight and predictable. VGLA, it just started from zero a week ago, so check the bid-ask spread in your broker before you make that first order. And also, you're probably wondering, should you make the switch between, VWCE and then put everything over to VGLA? But then essentially what happens with that is that you're actually paying a TOB every time you buy and you sell, and it's the 1.32% rate. So I wouldn't make that switch necessarily. It's just simply not worth it. So I would simply just continue investing and then maybe pointing some new money at VGLA, so you end up holding 2 ETFs, but at least you're not, paying some TOB to sell one existing ETF. So yeah, quick one. Every single week, every Wednesday, I actually make one of these videos for people investing in Belgium in English, because most of what you see online is written in Dutch or French. So if you find this video useful, please subscribe. And now let's get into the rest of the video. So obviously, if you're not into VWCE, the real comparison is against an ETF that owns the same thing, but it's taxed at 0.12. So the obvious one is a very popular ETF that I suggested in a previous video, which is IMIE, which is the SPDR MSCI ACWI IMI. It costs more than VGLA, so it's at 0.17% a year. But it holds developed markets, emerging markets, and small caps, which is very similar to VGLA. The difference, obviously, is the tax, because, again, the TOB, we're talking about a quite significant difference. So that's really, the one where you really have to make that choice. I think, looking at it, VGLA is a better choice if you're buying rarely in large amount and you're holding for decades. But IMIE is a better choice if you're buying every single month and you're doing kind of this buy and hold strategy of continuing your investment plans every single month. Then it makes a bit more sense to take the lower TOB rates. But of course, that's entirely up to you. It's your choice. So it's simple to just look at the comparison, look at both of them, make up your mind based on all the factors at play. So how do you buy GLA in Belgium? Well, you can go through a broker, obviously, which is a great option. You get the ticker choices, and then you can choose your exchange. The ISIN code, which I've highlighted here and I'll put in the show notes, is the same across all different brokers, so make sure you type it in, find the exchange that you can use, and then you can run it. So definitely VGLA is definite genuine upgrade on VWCE and a much closer call against a cheaper to tax ETF. The cheapest fund on the shelf is not automatically the cheapest fund for a Belgian resident, and the reason is obviously the TOB. Obviously, the full write-up with a bunch of different numbers along with my guide to investing in Belgium is handled in the show notes. I'll see you in the next video. Thank you.